But oftentimes the driver, or the vast majority of the time, the driver to all of this type of price action and volatility in the market is news itself.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. In today's video, I want to dive into the market fundamentals, go over the current crypto landscape, discuss in detail, and talk about why we're seeing a risk-off market environment, but leave you guys with the forward-looking perspective by showing you all that some of the largest financial institutions and banks are for a fact interested in onboarding into the crypto and digital asset ecosystem. It's just that right now we remain in a very sensitive risk-off environment due to recent macro uncertainty surrounding President Trump's tariff implications, geopolitical escalations and tensions, and the uncertainty surrounding central bank policy positioning. So in today's video breakdown, I just want to show you guys why it's so important that you all are paying attention to these things and not just fixating your attention all the time on bullish moonboy hype and hopium, and how here at CYPRX, we've been leading the charge and educating people properly on these underlying fundamentals from the beginning of this most recent pullback. And obviously, of course, before that, but just showing you guys why it's so important that you all pay attention to a community of like-minded individuals like us here at CYPRX, pumping out this valuable information to you all. So as you all can clearly see, the total cryptocurrency market cap has been significantly down since the end of last year, roughly around December 2024, on the 18th to be exact, is when the most local top took place. Now, I said to you guys here in this post, and I'm going to prove what it is that I'm saying to you guys, in these markets, in order to be numbered among the fittest, it is necessary to be fully informed, which is why here at CYPRX, we focus on the information that matters. By the way, towards the end of today's video breakdown, we're going to do a outlook on the total cryptocurrency market cap. We're going to read thoroughly through some of our private community fundamental reports, doing kind of a digest on where the market could go, whether it flips risk on or continues risk off. We're also going to be taking a look at a Signum Bank report from April that they put out just a few days ago. So this is important here. All right. Why is this important? I want to show you guys reputable individuals in this space. We have the CEO of Chaos Labs. Chaos Labs, for those of you all who don't know, is powering some of the world's leading financial institutions in the digital asset space. And they are also attempting to empower better financial decision-making by institutional grade market insights that are accessible to all through real-time risk management oracles and AI systems. And so I want you guys to listen to the CEO of this organization, again, coming from reputable sources, tell you all exactly what we've been telling you all here at CYPRX. These fundamentals that we discuss and talk about on the CYPRX platform are the fundamentals that nobody in the crypto ecosystem really wants to be paying attention to, because they're the boring things that don't really drive a lot of hopium and hype and price predictions. But this is the stuff that matters. So listen to these reputable individuals. We got Arthur Hayes here. We have the co-founder of Athena, and we also have the CEO of Chaos Labs on this podcast that was uploaded just from a couple days ago on April 4th, 2025. Listen to what this gentleman says about how they shift their algorithms and their investment decisions based off of how these fundamentals come out.
When you see like massive volatility in the market, what is the chain reaction in this mechanism that you described, the risk oracle, and you also mentioned AI is utilized in that mechanism? What does that chain reaction look like when you see volatility?
Yeah, so I think there's a few things. So first, like setting the stage and how AI even is a part of this. I think early when we started the business, all of our risk models were powered primarily by quantitative signals. So we're looking at volume, price action, liquidity, depth, all these things across different markets. But oftentimes the vast majority of the time, the driver to all of this type of price action and volatility in the market is news itself. And when news breaks, now we can react to it much faster.
So you all heard that right there, just so that way you all don't think that we're telling you guys that you should be paying attention to this stuff for absolutely no reason. You just heard this gentleman who's the CEO of a large organization that powers some of the world's largest institutions in this crypto ecosystem right now say that the primary driver of volume and volatility in this ecosystem is driven primarily by news fundamentals.
Or the vast majority of the time, the driver to all of this type of price action and volatility in the market is news itself. And when news breaks, now we can react to it much faster.
And how they have to shift their quant algorithms around after these underlying fundamentals change hands. That is huge. That is a huge, massive warning to anybody listening to this that has been a CYPRX follower, that we have been telling you guys the truth since day one, right? And again, devil's in the details. We have been calling this stuff out, not to toot our own horns, but to show you guys that we're actually pumping out valuable information. Here is a post from December 17th, the day before the market correction took place at the most local top, where the crypto market ecosystem topped out at, like, I don't know what, 3.7, 3.6 trillion back on December 18th, 2024. I said to you guys the day before that happened, the rest of this week will set the tone for the remainder of 2024 heading into 2025. Do not be blinded by greed. Know when the sentiment shifts by knowing what to look for. A pause on rate cuts from the Fed, hawkish comments from Fed speakers, rising UK inflation leading to a pushback on the Bank of England rate cuts, Bank of Japan rate hikes, or any hawkish comments from the Bank of Japan leading to yen strength, geopolitical tensions and escalations in the Middle East, Russia, Ukraine, Trump tariff implications, right? These are a few of the risks that remain, just to name a few. Understand the markets in which you trade and invest in. Riding the waves becomes relatively easy. This stuff, again, ladies and gentlemen, is the information that we teach in the private CYPRX community. And we have been extremely accurate, consistently putting out this information for you guys in advance, which we're again going to get into detail in today's video breakdown to go over the current market landscape and what could take place moving forward. I'm just physically trying to show you guys and my followers here that what we're talking about is the stuff that matters. No hopium, no hype, no retail analytics, drawing Fibonacci projections on our charts and saying that because this indicator had a crossover, the market's going to freaking pump super sky high. No, none of that hopium and bullcrap here. So before we get into the fundamental analytics, I still want to show you guys that the underlying infrastructure or crypto and the interest in the digital asset ecosystem has not dwindled just because there is market uncertainty. And in fact, in my personal opinion, again, this is my personal opinion, not financial advice, this pullback should be seen as a significant buying opportunity, right? Significant buying opportunity to get in at discounted valuations that we were seeing back towards the hype at the end of 2024 or before that. All right. Again, not financial advice, teach his own. After what I show you guys today, this is going to solidify that pretty much since the beginning of this year, all the bullish fundamentals that we've seen come out via the underlying infrastructure and crypto have not been priced into the digital asset landscape yet. And we're actually going to see that said in a Signum Bank report to back again what it is that I'm saying. So here I posted Feb was one of the most bullish months for the fundamentals in crypto, and they have not been priced in yet due to all of the Trump policies creating market uncertainty. And this is just a fundamental piece discussing and talking about how Ondo Finance is bringing tokenized real-world assets to MasterCard's multi-token network, a game changer for global finance, giving and offering 24/7 yield, instant access to treasuries, and seamless settlement without stablecoins and on-ramps. And then for the XRPL, it says here, this sets the stage. Let's zoom out, look at this real quick. This sets the stage for mass institutional adoption, right? Because it says here, this announcements follow news from last month that Ondo was bringing tokenized US treasuries to the XRP ledger, letting institutional investors access OUSG. So for the XRPL, this sets the stage for faster adoption of tokenized treasuries, bridging TradFi and DeFi with regulated, always-on financial infrastructure. Okay, this is a massive leap forward for mainstream real-world asset adoption. And this is, again, something that has not been priced in that took place in February during the market pullback. Here is a Goldman Sachs digital asset survey. You can find this stuff by, obviously, of course, following CYPRX or just doing the research yourself. These institutions tell you that they're interested. Institutional investor adoption of cryptocurrency and crypto-linked products is expected to grow in the coming years. Notice they're not saying that they're fearful or that they're steering away from crypto. No, they're coming into crypto while the market is at a discount. Don't you guys see everything that is strategically happening right now? Retail is getting shaken out left and right because they don't understand the underlying fundamentals. They probably put $5,000 into the market back in December, and now that $5,000 is probably worth $2,000, and they're thinking that crypto is a scam. Meanwhile, the underlying infrastructure is continuing to be built out left and right at a rapid pace, and right now we are just in a temporary uncertain market environment. We'll get to what could possibly happen if that uncertain market environment falls out, but let's continue. Here you can see it says 62% of respondents indicate that they currently trade cryptocurrency or crypto-linked products, either directly or indirectly, and 65% of individuals surveyed expect to maintain or increase their crypto holdings within the next 12 months. That is within a year. Okay, over the next year, the long term, crypto is bullish. Regulatory clarity remains the biggest hurdle to enter the crypto market. Pay attention to that. That's going to be important. And this is, again, a report, digital asset survey of 415 Goldman Sachs clients as of February 28th, 2025. That was literally the day, if you go look at the charts, that was one of the days that the total cryptocurrency market cap had crashed significantly heading into March. And that's when this survey was taken, right? So I'm just showing you guys physical proof backing what it is that I'm saying, that even during the market downturn, institutional investors surveyed are still looking towards onboarding into the digital asset ecosystem. Hopefully my proof and showing you guys this gives you guys a certain level of confidence that other retail investors that lack this type of research don't have. Here's another post just to show you guys. People are really bearish in crypto when things like this happened in March. This is directly from the Office of the Comptroller of the Currency. They put out this letter in March 2025, letter 1183. This effectively gives banks the green light to engage in crypto custody, stablecoin reserves, and blockchain transaction verification, but with regulatory oversight. Keep in mind, the previous survey that I just showed you guys from Goldman Sachs says that the number one reason why institutions are sidelined right now is due to lack of regulatory clarity. And now I'm physically showing you guys how just a month after, more regulatory clarity is coming into the space. By resigning interpretive letter 1179, the OCC is reaffirming that banks can legally provide crypto-related services, custody, stablecoin reserves, and blockchain participation, as long as they follow risk management and compliance guidelines. Some key takeaways from this report is that banks can custody crypto assets, banks can hold reserves for stablecoins, and banks can act as nodes and facilitate stablecoin transactions. This move from the OCC removes the barrier and encourages responsible innovation, signaling that crypto is becoming more integrated into the traditional banking system. And this is directly from the OCC. Again, all things that have not been priced into the market yet. Just another few posts to solidify the perspective that I'm trying to give you guys, that right now we have seen over the last 5 to 6 months the most bullish fundamentals in crypto that have not been priced in yet. Banks want exposure to crypto. Here is proof. This is the latest EBA public hearing that confirmed that banks are increasingly interested in crypto. This is directly from the EBA, the European Banking Authority, posted on the 4th of March, 2025. Again, directly in the midst of this bearish market pullback, this temporary pullback, right? Here you can see it says banks are increasingly interested in crypto assets to enhance revenue and competitiveness, exploring roles such as custodians, issuers of tokens, and providers of services like trading and lending, right? I'm just saying, pay attention to detail. They tell you this stuff in their documents. Now, real fast, I have this industry-leading expert from a video breakdown that was posted on February 20th, 2025, has 135 views. This is Jennifer Murphy from Rune Digital Assets. Listen to what she says here about the perspective from large financial institutions.
If you saw Brian Moynihan, the CEO of Bank of America, he was at Davos recently. In an interview, they asked him about crypto, and he said, the minute we're allowed to be in crypto, we will be there. We will be there in payments. That's their number one focus. So he's ready to go. Same with BNY Mellon. BNY Mellon, I saw the head of their ETF business recently. I asked him what they were doing on custody, and he said, the minute we're allowed to do custody without getting in trouble with a bank regulator, we're already ready. We have it all programmed, we're ready to go.
And so the reason why I'm playing these videos for you all is so that you can see that nobody's paying attention to this stuff. 135 views posted on February 20th in the midst of this market turmoil, all right? Now, heading over to the fundamental analytics, we've been warning you guys consistently. Here is a video breakdown that I posted via a live Zoom call that I hosted for you all on February 28th, mentioning that the blood was not done yet. And this is when we were trading at around $2.7 trillion in total market valuation. And I had mentioned that we were most likely going to dig a little bit deeper down into 2.3 to possibly 2.2 to around $2.4 trillion and see a little bit more market bloodshed. Now that you can see that we were warning you all over a month in advance that the market was going to continue to deteriorate in terms of risk asset valuations, let's read the Sygnum Bank monthly investment outlook from April 2025. And then I want to read for you all thoroughly our fundamental reports from the CYPRX private community. So just a couple of highlights to give you guys some insights and perspectives into the current fundamental landscape from a large financial institution. Let's just thoroughly read through this. So This goes on to say, the market review in March. The crypto market rallied 5 to 10% at the beginning of March on social media messages from Donald Trump, which was later followed by an executive order establishing Bitcoin as a reserve and a strategic crypto stockpile. The market quickly rejected that positive news and retraced significantly afterwards. However, the up move was short-lived as the specifics of the eventual order and the crypto summit that followed undershot the market expectations, and the narrative moved away from crypto-specific news to focus on global macro risk factors. Keep in mind, the individual from Chaos Labs told you guys that quantum algorithms shift under changing market conditions and underlying fundamental news, right? Which is why we stress the importance of learning these fundamental factors. Sweeping tariffs announced on Liberation Day are worse than the market had expected and translate into increased instability and lower global growth probabilities. Safe haven assets such as gold or the Swiss franc rallied in response, as did bond yields. The continued uncertainty is weighing on financial markets, not least because it makes it hard for businesses to plan and investments are withheld. The silver lining is that the increased likelihood of rate cuts and other forms of liquidity injections as growth slows are still imminent. The market reacted to recent slight negative suppressions of U.S. inflations and slight positive surprises to industrial production in counterintuitive manners, upping the probability of rate cuts. Jerome Powell's recent comments that tariff-related inflation will be a one-off hit suggest that the Federal Reserve will not be held back from stimulating growth, and therefore higher inflation was interpreted more as a threat to consumer sentiment and in turn to growth. Meanwhile, signs that economic activity remains fairly robust allay stagflation fears. Although the uncertainty about economic policies and their outcome weighs heavily on risk, the growth picture is fairly Goldilocks, not too hot but not too cold. This is extremely important. Pay attention to this segment of the report. It says, in addition, global liquidity has been rising, and this has traditionally been followed by a similar move in risk assets with an approximate 3 to 5 month lag. The historic pattern would place the timing of the next upswing at roughly the beginning of May, while the continuation of the macro uncertainties can lead to historic relationship breaking down. We believe the likeliest scenario remains a combination of benign U.S. growth and expanding global liquidity supporting risk assets. That is extremely bullish. Keeping in mind, I just showed you guys how financial institutions are in the process of still finding significant amounts of interest in onboarding into the crypto ecosystem, saying that they're ready to go when regulations come into play. And we are seeing the possibility of liquidity injections still flood into this market, which tends to prop up risk asset valuations. Here it goes on to say, the recent high correlation between the crypto market and risk assets has come at an unfortunate time, handicapping the progress on Bitcoin reserves. As there are still quite a lot of new investors in crypto, they will base their conclusions on the recent behavior of the market. But in fact, the crypto market has gone through periods of no or even negative correlation versus high correlation with risk assets throughout history. Now up here, it goes on to say, meanwhile, the crypto fundamentals continue to improve as regulatory agencies establish clear rules, feasible paths to compliance, and remove obstacles. This is creating the foundation for a revival in activity and innovation across the crypto industry. And currently, this upside has not reflected the prices in crypto assets yet. You see that right there. So this is exactly what it is that I've been telling you guys, that the underlying infrastructure for crypto is extremely bullish right now. And in the short term, maybe over the next couple of weeks / months, we still may see some pain in the digital asset landscape as uncertainties continue to weigh on global risk assets. If the market decouples from global risk assets, i.e. crypto decouples from global risk assets, or we start to see liquidity injections or even an improvement in the risk off sentiment that we've recently seen, the next turnaround and the next leg up that we see in crypto is going to be absolutely epic, that I firmly believe people are not ready for, right? And that has been confirmed by other industry leading experts on stage like Brad Garlinghouse.
I have heard from some tier one banks that they may issue their own US dollar stablecoin. And hard for me to predict how that plays out.
Yeah.
But that also is a evidence that they're leaning in a way they haven't before. And again, if there's one thing I would emphasize to this audience, we are underestimating the tailwinds from the shift of the last 6 months. The largest economy in the world has been quite hostile to our industry and is now moving the other direction quickly. And I think we underestimate those tailwinds.
Yeah.
absolutely. I totally agree with that sentiment.
So now that the Signum Bank report is out of the way, and you can see we've been covering the same exact things here at CYPRX, literally at the exact top, the day before the market most recently topped out, we warned you guys about these same exact things that now Signum is talking about a large bank in their April 2025 reports. Can you guys now see why it is so important that you are paying attention to these underlying fundamentals? So with that being said, let's go into detail. Let's read our private CYPRX fundamental report, and let's discuss and talk about what could possibly take place moving forward, given the most recent market landscape. So overall, to sum this up without boring you guys to death, the market's focus remains currently on the potential U.S. recession signals, looming trade conflicts, and escalating geopolitical events. These developments have reinforced a risk-averse environment, pushing investors to seek safe haven assets and increasing the likelihood of further volatility. So let's just go over a very simplistic analysis. With tensions on high on multiple fronts, from trade wars to geopolitical conflicts, market sentiment still remains relatively fragile. Hawkish or uncertain central bank messaging, disappointing economic indicators that spark further fears of a recession, any escalations in trade wars or reciprocal tariffs that are announced from major jurisdictions, any major groundbreaking announcements of war and geopolitics surrounding Russia, Ukraine, or the Middle East could all drive further selling pressure on risk assets. So under those types of conditions, these are the types of scenarios that we expect to play out. Further sell pressure on risk assets, continuing to target previous lows, sending the total cryptocurrency market cap down into the $2 to possibly $2.2 trillion range. On the flip side, to end this video breakdown here on a positive note, if we see any signs of inflation cooling amidst the PPI figures and the CPI figures that we have this week, any healthy economic data that eases recessionary fears, any de-escalation and geopolitical tensions in Russia, Ukraine, or the Middle East, and last but not least, any improved trade relations or any clarity from policymakers could stabilize or even bolster risk assets moving forward. And under those conditions, we could see optimism flood back into the markets, which would drive more demand for risk assets and lead to some profit taking on safe haven assets like gold. So with all of that in mind, my goal here today was to show you guys that now is the time for you all to grasp these concepts and to start to implement them into your trading, into your investing regime, and not just fixating all of your attention on all of the bullish moonboy hopium and hype that exists out there in the space via these uneducated influencers that are always steering you guys in the wrong direction. You've now heard industry leading experts in the space say that news is extremely important and determines a lot of their trading and algorithmic decisions in this market, which should prompt you to want to go and learn these things yourself, which is exactly what we offer in the private CYPRX community. You guys have also seen insights from multiple different financial institutions that banks are heavily interested in this space, and that the underlying infrastructure in crypto is not broken or deteriorating, and it is actually stronger than ever. And as soon as the market uncertainty subsides and starts to fade away, we are most likely going to see another leg up that a lot of people are not ready for because they lack education in this space and they don't understand the longevity of this ecosystem and where it's truly headed. I hope that with today's video breakdown, to some degree, you have an understanding of what could possibly take place moving forward. If the uncertainty continues to linger in the market, we're most likely going to continue to see sell pressure remain, as crypto is still heavily correlated to risk assets in the now. As always, if you all enjoyed today's video breakdown, do me a favor, smash that thumbs up button and subscribe to the platform. We do appreciate the love and the support, and I will see you all in the next video breakdown.